Hey everyone, John Henry here, and today in the market psychology video we have a breakout move on crude oil. It's kind of nice to see crude oil wake up for a little bit here. So yesterday we really didn't go anywhere, right? We had a big move up, but most of it was taken back in the lunchtime session. Now they did get some ground back up to the upside towards the end of the day, but they never did quite make it back to the high of the day before they ended. Now, we open up this morning with a relatively weak start, right? We gap down, and the first candle is bullish, but I mean, kind of. You know, it might as well just be a doji. There's not a whole lot of good movement in here proving anything. And then the very next candle shows a bear breakout type move. And the sellers at this point will be interested because, well, this first candle here doesn't really let the buyers in very well. And the sellers have a chance to try to take it down. Now, this is where it gets interesting, and this is actually part of the Trade of the Day video. If you haven't had a chance to watch that, you can. But this is where you start seeing the sellers get completely shut down. We see the sellers immediately get shut down by the buyers in a it's one tick difference in the size of the candle. Completely shut down the sellers, essentially saying, yeah, okay, not on my turf, right? We're going back up whether you like it or not. So the sellers at this point now realize, we messed up. Right? We messed up. We should maybe get out of this if we're given a chance. And above this candle, there isn't a seller that's sane that's going to want to stay in if it breaks above this humongously bull candle. And the ones that didn't get out there, well, they got out there, right? Buyers come in on a flood, and this is a beautiful reason to be a buyer here, knowing that the sellers are feeling trapped because that's going to cause a breakout type move. Now, the breakout type move didn't happen until it came back to that entry point, right? The buyers buy in here. A lot of the sellers probably exited here, but the ones that didn't see it follow up with a doji, and then a weak bear bar thinking, all right, yep, I'm wrong. Yeah, fine. I tried hanging on to it, but it just didn't work. So I'm going to get out. And that causes this monster rally, big bull engulfing candle all the way back up. And that's another reason to buy into this, knowing that the rest of the sellers are now out of the market as well. Now, we have inventories today, right? So when you get closer and closer and closer to inventories, a lot of times it's best just to sit on hands. And if you look at the candles, you can see why, right? It gets really, really nasty. Now, one interesting thing is that the inventory candle actually came back down to that same area and bounced again, right? So that area is being obviously defended, but you don't want to buy it on inventory. So we have to wait for a little bit more information. Price comes back to it again, bounces off of it. Doesn't trigger in the buyers, though, before they come back down and bounce off of it again. Doesn't trigger in the buyers. Comes back, bounces off it again. You kind of get where I'm going with this, right? The buyers are defending this level aggressively, and they are not letting the sellers take anything underneath it. And then you can tell where the sellers gave up, right? They tried and they tried and they tried, and they gave up. Now, that huge bull spike like that in this context makes perfect sense to be a buyer because you know there is a phenomenally good chance that you're going to make another leg up again, given that all of the sellers are getting out. And the ones that don't are going to feel a world of hurt when they trigger above this candle and it stops them out. So that's where you get this big spike candle coming from, because the rest of the sellers that didn't get out with a small loss above here, they got out with a big loss up here, and they may even try to chase it and reverse and go long, and that's going to cause even more buyers coming in at the same price. Big spike higher there, and that's exactly what we like to see when you're combining technical analysis with market psychology. You can't ask for a much better 1-2 punch than that. So hopefully you learned something, hopefully you found it interesting, and we'll see you next time.